Next, we discuss property, plant and equipment. What did we discuss till now? We discussed cash and cash equivalents. Yes or no? We discussed inventories and we discussed trade receivables. Yeah, we discussed receivables first and then we discussed inventories. Yes or no? These were all what is called current assets. These were all current assets. Now we have begun our discussion on what is called non-current assets, fixed assets or capital assets. We will begin with property, plant and equipment. Tangible assets. Assets that you can see, feel, touch, etc. Okay, tangible assets. Property, plant and equipment. Now, let's us first look at the initial measurement. So, when you buy an equipment, when you buy a machinery, when you have a building, buy a building, at what price is it initially recorded in the books? Let us take an example. I am buying a piece of machinery. This is the kind of machinery that I have purchased. The cost of this machinery as per the invoice is $50,000. Okay, so is this a part of the cost of the machinery? Yes, it is a part of the cost of the machinery, purchase cost. Now let us say that I have actually imported this machinery from Germany. I have imported the machinery from Germany and I have incurred a transportation cost of 10,000. What do I do with this 10,000 cost? Is it a part of my cost of machinery or is it an expense? Normally what happens when we have transportation charges, etc. students? Transportation, salaries, rent, these are all certain expenses which occur every day and therefore we say they are all expenses and we take them to the income statement. Do you remember or not? So whenever there is an expense, we take them to the income statement and this is called a revenue expenditure. Is it clear? But what is this transportation cost? This transportation cost has been incurred in order to bring this machinery to my factory. Can I operate this machinery unless I get it to my factory? No, I cannot leave it in Germany and say it is my machinery. I cannot use it. I will get no benefit if I just buy it in Germany and leave it there. So this transportation cost which is incurred, it is in order to bring the machinery to my place, to my factory. Until it is brought there, I cannot use this machinery. Therefore, this is also added to the cost of my machinery. It is added to the cost of my machinery. Installation. Now that I've got the machinery in my premises, the next question is I have to fix it. There is a particular way in which it is to be installed. And so I call another agency to install it and this agency gives me a bill for $6,000. What happens to these installation expenses? Since I cannot use the machinery till it is installed, in short students, all costs which are incurred in order to make this machinery ready for use by me should be added to the cost of the machinery. Clear? So my machinery now, though the bill said only 50,000, but I am going to add this 10,000 transportation cost to bring the machinery into my premises and 6,000 installation costs. Let us take another interesting cost, demolition cost. Let us say that in the area where I am going to install this machinery, okay, there is a structure there. And unless I remove that structure, I cannot install my machinery. So I get a team to demolish this particular structure and it costs me another $4,000. But then I cannot install the machinery. I cannot install the machinery till this structure is demolished. Though it really has nothing to do with the machinery as such, it would still be added to the cost of the machinery. Why? Because unless that is done, my machinery cannot be made ready for use. Is it clear? So these expenses, this transportation cost, these costs seem to be like expense. It's not really a concrete part, let me say, a tangible part of this asset. But still, these are all added to the cost of the asset. So these kinds of expenditures are asset. And what happens to an asset? It goes to the balance sheet, and this is called a capital expenditure. So depending on the purpose for which these expenses are incurred, they may be a revenue expenditure or a capital expenditure. Maybe a revenue expenditure or a capital expenditure. Let me take one more cost, borrowing cost. Suppose I am constructing this equipment. I have got people to make my machinery for me. I am buying materials, I am putting labor in and making the machinery. But frankly, I don't have enough money, so I've taken a loan to do this. Now, over a period of 6 months or 1 year, let us say I have incurred interest charges of $2,000. $2,000 interest charges, and my asset is not yet ready. It is still getting ready. The costs which are incurred, even the borrowing costs, the interest costs which are incurred on a loan taken to construct or buy this asset, till such time as this asset is made ready for use, these costs can be added to the cost of the asset. So now, though my original invoice just said machinery cost was 50,000, look at my cost, it has become 50,000 plus 10,000 transportation cost, the cost of installing the machinery, the cost of demolition of a structure so that the machinery could be properly installed, and also the interest cost, the borrowing costs till such time, paid for the period till such time as the machinery is put to use. It has become 72,000. 72,000. So here we see there are certain expenses which I would normally call expenses, which normally would go to the income statement. These are capitalized. What is the word we use? These are capitalized. That is, we call them an asset, not an expense. Because it is an asset, it goes to the balance sheet and not the income statement. So we must be very careful. We must understand when an expenditure is revenue in nature and when it is capital in nature. Does it make a difference? Of course it does. Suppose I take this transportation cost. I am not aware of these principles of capital and revenue. I take this transportation cost and I say that this is after all an expense. It is an expense, and I book it as an expense, not as an asset. I do not add it to the cost of the machinery. What will happen then? It will go to my income statement and my profits will be reduced. My net income for that period will be reduced. Similarly, on the other side in the balance sheet, my asset would be reduced. My value of the asset is not really 50,000, it is 60,000, because the value in my factory, this was 50,000 is the cost in Germany, but to install it in my factory, it is inclusive of this transportation cost of 10,000. So if I make mistakes like this, there would be a difference in the profits, there would be a difference in the assets. Therefore, my income statement would be wrong, my balance sheet would also be wrong. So one has to be a little alert when there is expenditure while identifying revenue and capital expenditure. Okay. So let us just understand the definition of this now. Whenever there is an initial measurement of property, plant and equipment, it is recorded at the cost of purchase and includes all necessary to get the asset ready for use. When the asset is ready for use, it includes the cost of construction and interest on loan till the asset is ready for use. Clear? Very clear? Next, let us consider subsequent costs. What is subsequent cost? After I buy a machinery, next year I might have to repair the machinery. Yes or no? What happens if for the next 2-3 years I am repairing every year I have some small repair expenses on the machinery. Is it possible? It is possible. What do I do to these repair costs? Is it capital? Is it revenue? I am having repair cost. The question is it capital? Is it revenue? Say after 3 years, the 4th year, I do a big overhauling of the machine. I change a lot of part in the machine, so much so that this machine, which used to produce 10 units per hour, is now producing, let us say, 16 units per hour. The productivity has gone up superb. Do you understand? What happens then? Overhaul in such a manner that productivity has increased. Is this capital in nature? Is this revenue in nature? These are the questions with relation to subsequent costs on your property, plant and equipment. So it is either capitalized or assets. That means if it's capitalized, it goes to balance sheet, it becomes a part of the asset, right? We add it to the cost of the machine. Or it is expense, which means it goes to the income statement. It is just an expense for the particular period. How do you decide? It says that you capitalize it only if the life of the asset has been extended. So I have repaired the machinery in such a manner, I used it for 3 years, I have done some repairing and overhauling such that instead of lasting for another more year, originally it is going to last for 3 more years. So it is capitalized. In that case, if that is the kind of repair work I have done, then it should be capitalized. So it's capitalized only if the life of the asset has been extended or the productivity of the asset has been increased. Productivity has been increased. Either the quantity or the quality of the units produced has increased. The quantity or quality of the units produced has increased. Followed only then it is capitalized. That's why when I said here, when there was an overhauling, so that the productivity has increased from 10 units an hour to 16 units an hour, then those costs are capital costs and added to the cost of the asset. Added to the cost of the asset. But if I have regular, every annual repairs, that is for maintaining the asset. That is for maintaining the asset, and therefore maintaining the asset in their current levels of production, in their current state, working condition, and those costs are treated as expense. So annual repairs, annual painting, etc. are treated as expenses because they are incurred to maintain the asset. They are maintenance costs, and I get no additional future economic benefits. Is it clear? So they are expensed when the costs are to maintain the assets in their current working condition, maintain the assets, but they are capitalized when I will get more economic benefits in future. Is it clear? Let us test with some examples. Identify whether the following expenditures are capital or revenue. Let us take them one by one. Repairs to a machinery. Let us assume that these are the ordinary annual repairs. Since these are incurred every year and must be incurred every year in order to maintain that asset or that machinery in its current condition, it should be capital or revenue. It should be revenue. It will go to income statement. Correct? Next, we have overhauling of a machinery so that its productivity has increased by 50%. That's right, it should be capital. It becomes a part of the cost of the asset. Next, legal charges incurred on purchase of a building. I buy the building, the legal charges incurred on the purchase of this building, all costs incurred on the purchase of an asset till it is ready for use must be capitalized. So it is capital. But look at this. Legal charges incurred after 4 years due to dispute in title to property. Legal charges incurred after 4 years due to dispute in title to property. Why is this incurred? In order to maintain my title. Yes or no? In order to maintain my title of ownership. Therefore, this is revenue. It is not adding any additional economic value. Next, cost of temporary shed constructed and later demolished while construction of a building. So I'm making a building. I'm incurring costs on the building. Also what happens is I make a temporary shed, maybe to keep my materials etc. in. And once my building is constructed, I just destroy the shed. This cost of constructing and demolishing the shed, what do I do? Is it revenue? It was a temporary structure after all. Or is it capital? Without that shed, I could not have made the building, and this cost of temporary shed is therefore capitalized. What do you mean by capitalized? It's just added along with the cost of construction of the building. It is added along with the cost of construction of the building. So what will happen? This building will have a value of all the costs incurred, including the cost of the temporary shed constructed and demolished. Clear?